Good morning, traders. This is the wake-up call. We have a lot of pairs and interesting positions heading into today's trading. We could see a bit of action, or more than likely, we could remain range-bound ahead of tomorrow's data, where we have the Bank of England and the ECB on deck. And you also have to keep in mind there's always rhetoric coming out of Spain, and now I hear Cyprus, where they will not take the conditions of an ECB bailout. Okay, so let's get right into it and get into the meat of the situation and take a look at the pairs that I am currently watching. The first, of course, is being the Great Britain USD cross. As you can see, the pair moved down towards trendline resistance last night that we had spoken about quite a few times. In the 161 area, but it could not break through there. We're still waiting for a confirmed break of this, and it actually looks like it could almost be a head and shoulders at that point. And we could be heading down towards the 159.60 area with a break of the 161.0. You can see that we moved below the that was where this was a stop, a short stop. The stop hunt below the ascending trend line that has contained the price action over the last month or so, and we're trying to consolidate it below that. If we have a good 4-hour close here at the 9 o'clock, this could be a shorting opportunity with your shorts below the lows. Your stops above the highs here, looking for a push lower, or based on how this channel ends, it could be just the opposite. You could go along with your stops below the lows here. So this is the pair of big time of interest sitting right here at this descending trend line. Now the Aussie is also another pair that last night it broke below the descending trend line that we spoke of. Let's see how quickly that trade happened, if it was a slow gradual thing or if it just no, it just gradually broke through the level at looks like about at 11 o'clock at night, and broke through at 102.42, moved down to touch 102, and now it's coming back. What we could possibly see on this pair is another move back up to a test of this 102.57 level, and then maybe reverse back down higher, or I would expect consolidation at this level, or we could move all the way back up to the 102.80 level. Things could be a little bit overdone at this price range, but at the current moment, I definitely wouldn't recommend going short. Actually, to tell you the truth, I wouldn't recommend going short at this point right here, because it looked as though the meat of the trade had already occurred after consolidating for over 9 hours before it decided it was time to move lower once again. So I would remain silent on this pair, but look for a move back up towards the trend line or the 102.80 area as a possible chance of a spot to go short once again. Now, the New Zealand USD did not let us down again this week. The pair has remained almost as predictable as a currency cross can be. It moved once again towards the top of its resistance zone at 83.50, and now it's broken down lower to the bottom of the zone. It moved down to 82, and now it's finding a bit of a bounce. Once again, I was looking for a move down towards the 81.84 level, looking for a bounce there, hoping to get a move back up towards the 83.50 zone. Once again, we have to just watch it in this level. I would rather see a test of the extremes before we get a bounce in either direction. Another pair that's in a very interesting situation is the USDCAD. I actually went long this pair last night around 3 a.m. You can see that there's a well-defined break of the trend line, and as long as we remain above this level before the 9 o'clock close, if we do break back below this level, we're touching this, I probably will close this trade out for a loss. I went long about 98.70. As long as we stay above this trend line, we are now officially in the new zone, and I would be looking for moves back up towards the 99.50 area in the short term, but we need to consolidate and keep out of the traffic chop zone that had been traveling in for so long. The next pair we're going to look at, well, the yen, obviously, still moving up. We spoke about this on Yen Talk yesterday. Bounced off the 77.50 level. It's up towards support at 78.30, which is the 50 fib. We could get a bounce lower at that level. I'm not really interested in the yen cross right now. The interesting pair is the AUDJPY, because as we spoke, spoke about in Yen Talk yesterday, it is traveling on this ascending trend line higher, but more importantly is this 79.50 level. If we get a break of this 79 79.50 level, you can see there's definitely a head and shoulders that's forming there. We could see a move all the way down towards the 76.50 level, and then maybe ultimately all the way down to the 75 level over the next few days or weeks of trading. So the 79.50 level on the Aussie JPY is critical at this moment. We have to keep our eyes on that. And the Euro GPY, we're just interested in that because we still are long that trade, and it looks as though that the pair is up at 102, and as we talked about, if it went down to test the 0.38 fib at 10071, it looks like it could get a bounce at that point. It has. We're definitely looking for a move up towards 10140, and any move towards below the 10071 area would probably close the trade up. If we break 10140, we could be on the move higher to 10275. The rest of the yen crosses are basically not in any compelling situations to trade. So what we're going to be watching today is the new trades is the AUDJPY and the USDCAD with the break above the 98.50 level, and of course you have to watch New Zealand consolidating in between the zones. All right, everybody, this is the wake up call. Come on, let's go out and let's make some tips.